context for the bears didn't look bad last week. When the week started out, we had a sell signal. It was a weak sell signal, but we still had a sell signal, and it was a possible lower high, but the bears could not capitalize. So what happened? The sell signal never triggered. The S&P 500 rose. It was up 2.5% for the week. So let's look at a chart of the S&P 500, then we're going to look at momentum, and then get into a little bit, real briefly, into some of the other markets and this week's operating plan. And here's a look at a chart of the S&P 500. This is a weekly chart. So first things first, there's a few things I want to mention, and then a possible scenario. And so a few things worth mentioning. First things first, the bulls continued their advance. They had a strong bull close. Strong bull close is simply a close at or near the high for the week. We got that. The bulls were buying. They were buying until the closing bell on Friday. So we had a strong bull close. That's exactly what a strong bull close is. The second thing is that the sell signal was not triggered. We had a sell signal going into the week, and the bears couldn't capitalize. Frankly, the context was good for them, but they couldn't do it. They just couldn't pull it off. So now the bulls have advanced, and we are in the top third of this larger trading range. The larger trading range is about the 29.30 level, right down to the 23.50 level right in there. So we're in the top third. We're in the top third. And what that means is that the risk is greater for the bulls right now. So one possible scenario that we're looking for is that the S&P 500 has a pullback. So we've got a pullback in the S&P 500, and then what we see is a strong buy signal, or we see a buy signal above the 2400, 2350 level, or maybe just a little bit lower, but we get that strong buy signal. If we get that, that would certainly be a compelling case for the bulls. But right now, there's a lot of risk on the table as far as the bulls go. So one possible scenario, we see a pullback in the S&P 500, we get a buy signal above the 2400, 2350 level. And what that would cause is a better risk to reward ratio. One of the considerations in our decision-making process is longer-term momentum. Momentum is simply at the velocity or the speed in which a market is rising or falling, or frankly just or going sideways. So look, at the end of the day, the S&P 500 has started to again turn positive in momentum. Now we look at it a monthly time frame on those oscillators, so we're not getting the close yet, we're not getting the final reading, but it has started to turn positive, and so that's a bullish thing for the S&P 500. Of course, if you're long, you want to see positive momentum. Now, last week, as far as price action, a lot of the markets were up. Fixed income was up. A lot of the U.S. sectors were up. All of them, frankly, except for utilities and emerging markets. A lot of international markets. A lot of the commodities were up. It was just a bullish week. I mean, overall, in a lot of the different markets, a lot of different sectors and asset classes. So with that, even though it was an up week, not a lot of structure change. There wasn't a lot of structure as far as the longer term structure, as far as a change, whether there was a new high or a new low in the market. So that hasn't changed. And what that means is that it hasn't really created any compelling reasons for us to add anything new at this time. So what we're going to do is we're going to hold off, we're going to wait, and we're going to either wait for a pullback, we're just going to wait for a different structure in the market before we take action. So with that, we're going to continue to keep a close eye on things, look for opportunities with good risk to reward ratios. Have a great week, and we'll talk to you next time.